Hey everyone, welcome back to our channel. Today we're diving into TNF Pharmaceuticals Inc., ticker TNFA, a clinical stage biopharma company focused on autoimmune and inflammatory therapies. Can its stock hit $1,000? We'll analyze its financials, pros and cons, competitors, and long-term potential in this 6-minute deep dive. Let's get started. TNF Pharmaceuticals operates in the in vitro and in vivo diagnostic sector, developing novel therapies for complex health conditions. As of 2025, its stock price is just 28 cents, down drastically from $181.80 in 2021. Its market cap sits at a modest $1.66 million, reflecting a tough journey for investors. The company has no revenue, high losses, and a challenging path ahead. But could there be a turnaround? Let's break down the financials. First, the pros out. TNFA has a solid liquidity position, with a current ratio of 1.72, and a quick ratio of 1.52 in 2025, meaning it can cover short-term obligations. It's also reduced its debt significantly, with a debt-to-equity ratio of 0 in 2024, a big win for financial stability. Plus, a long-term strategic investor backs the company, signaling some confidence in its future. Now the cons. TNFA is not profitable, reporting a net loss of $1.8 million in Q2 2025, an improvement from $9.6 million the prior year, but still concerning. Its profit margin is deeply negative, and it generates no revenue, relying on investment income to offset losses. The stock has also been heavily diluted, with shares outstanding jumping 193% in 2025, hurting existing investors. How does TNFA stack up against competitors? In the diagnostics and biopharma sector, competitors like those in the Nasdaq Biotech Index often have positive profit margins around 1.5%, while TNFA's margin is negative. Its return on equity, at -142.67%, lags behind the industry's -60%. Without revenue or a commercial product, TNFA is at a competitive disadvantage. However, if it successfully brings a therapy to market, it could carve out a niche. TNFA doesn't pay dividends, so it's not a candidate for dividend aristocrat status. Since its peak in 2021, the stock has plummeted, delivering massive losses for investors. Compared to the S&P 500 or Nasdaq Biotech Index, which have seen steady gains, TNFA's performance is underwhelming. Short-term returns look risky, and long-term gains depend on a breakthrough. Looking to 2030, 2040, or 2050, TNFA's growth hinges on its pipeline. Success in clinical trials could drive value, but regulatory hurdles or competition could derail it. Political factors like stricter FDA rules or economic downturns are risks, while healthcare demand could be a tailwind. Can it hit $1,000? It's a long shot. It would require a blockbuster drug and a market cap in the billions, which seems unrealistic given current trends. That's our take on TNF Pharmaceuticals. High risk, high reward, but the road to $1,000 is steep. What do you think? Drop your thoughts in the comments, and subscribe for more stock analysis. See you next time.